Welcome back to the channel. My name is Brad, and today we're going to talk about TSLY against TSLP from Curve. And who's the winner? I know I've seen some spreadsheets, but spreadsheets don't tell the full picture in my opinion. Just nothing wrong with spreadsheets, because you know that I use them, but I only use them to create the graphs because I like graphs. I don't like just data sitting in a spreadsheet and you can't even tell what that truly means. Well, let's start with Tesla. Tesla, with Elon Musk, is very volatile. No doubt about it. And it's very hard to actually get a price prediction of where you think Tesla is going to be price-wise. Because price is what you pay, but value is what you get. Wow. Warren Buffett, right off the get-go. And can we come up with a price for Tesla? If I did my math, I come up with right around the $190 range is where I would be somebody that's willing to buy Tesla. Right now, it's overpriced. Cannot recommend it as an entry point today. Now, let's look at other things of Tesla. According to Seeking Alpha and a lot of Wall Street analysis, they predict right around the $208. And you can see the price of Tesla compared to the analyst. Usually the analysts are high. That's what makes this a little weird with Tesla. Because if the analysts are usually high and the analysts are calling for 208 and the price of Tesla is in the 240 range, there's a problem. There's a clear problem. The analysts are usually high, not low. So that's why I have it about the 190 range, because you don't know where this is going to go. Some analysts actually have the price down at $85. That's just too low. My math didn't even come up down to that low. But now you can see the full range from $310 to $85. That's a big range for trying to predict where a price of a stock should be. And again, get the value and then ride it up. Because if you're buying at the highest prices to recapture what you're going to lose because of the options, doesn't make sense. You got to buy low and sell high is the whole conversation. But for what I'm trying to do with income, you got to buy at the right price so you can ride it up selling the options. Because if you buy it too high, you may never recover. If I look at revenue and earnings, this is something I would personally not hold. It just wouldn't do it. It's just, I see too many red dots on the chart. And then you have, a CEO that when he talks, groupies will follow in. I still want to give you my analysis though. 190 is the price that I would be buying in at. Also, I'm just going to take this compared to the S&P 500. If I take Tesla against the S&P 500, it's not keeping up and it's very volatile. The chart shows you the price volatility against the S&P 500. TSLP is getting a 25.9% distribution rate. Not bad. Not a bad distribution rate, but nowhere near where yield max is at. Come on, yield max, 105%. Come on, it can't be bad. It's got to be good at 105%. You can't go wrong with 105% returns. I'm not even wrong. Oh my gosh, I'm gonna have to change everything. It's 115%. I can't believe I'm wrong that much. It's not the first time I'm wrong, but hey, 115%. There's no way you could go bad with buying Tesla. It's 115%. Come on, people. You should put your whole paycheck into this every single week. It'll pay for itself. Sarcasm. Sarcasm there. Thank you for listening to my sarcasm. So if I take Tesla from opening, very first day, compared to today, and you took everything, $50,000 investment, and you took every penny out, unfortunately, your investment is well below $20,000. If you only took the 8% like Brad was going to take, you're at $30,000. So your $50,000 investment is now at $30,000. If you reinvested everything, you're still well below $40,000. And that's assuming you bought in on day one. If I take TSLP from day one, the chart is significantly different. And I'm above my original purchase price. And I can take my percent. And the NAV is almost back to where it really began. And if I take the chart from Seeking Alpha, like I did before, and I see that, hey, Tesla is almost back up to par. Wait a second. That's the same thing as TSLP is almost back up to par with the NAV. So something's wrong here. How can TSLP be matching what the Seeking Alpha chart is? And by the way, I am an affiliate now of Seeking Alpha, link down below. I use Seeking Alpha a lot. Easy to collect data. Just saying, it's easy to collect the data that I'm looking for as an income investor. Now that you've dragged us all the way through this video, Brad, show us the chart between TSLP and TSLY. Show us. What does it look like? Well, the chart doesn't lie. The chart tells me that, hey, TSLP is keeping its NAV and has had appreciation compared to Tesla and compared to TSLY. It's a clear winner between the two. The question becomes, how much are you trying to take off? Are you trying to take off 8% like Brad is? Or are you trying to take all the proceeds to pay for a car or something like that? That's the craziest thing I've ever heard. I'm going to take the proceeds and pay for a car. Okay. Yeah, that's not income investing. That's speculation. If you want to speculate, there's a whole lot better things to be speculating in. XDTE is even a better speculation. I Spy, that popped back up on my radar here recently, is a better speculation. Just saying, you can't speculate with your future. Now, if you're taking 8% and you want to have multiple funds, this is something you can take 8-10% of. I just wouldn't do it with TSLY. I would do it with TSLP. Until something else comes along, this is the better product today, in my opinion. Now, everybody has an opinion. I'm just showing you what I would do if it was me. It's not going to be me. I'm not going to get anywhere close to either one of these products. But I do like Tesla. I'll just throw it out. I do like everything that he's bringing to the table. I'll hold Tesla in my S&P 500 holdings. I'll have it in my QQQ holdings or my, QDTE or QQQI. It's in there, but I'm not going to hold it as an individual stock. Just won't do it. That's me personally. But you do want to play the market? Buy one of these products at the 190 range, but I would buy TSLP. Now, why are you saying this, Brad? You've said it multiple times. Well, you got to think of the volatility of the stock, even with the call spreads that they're running today. And let's look at this. Let's talk about what they're actually doing. I went out and actually graphed this for you, and So lo and behold, I show a screenshot of this. And next thing you know, I got a follower on TradingView. Crazy. Because they see that my name up in the left-hand corner. And you can follow me on TradingView. Even though I don't post anything on TradingView, maybe I'll have these graphs readily available for people. Maybe I can publish them on TradingView. More than willing to do that for everybody. Just throwing it out. If you want to follow me on TradingView, I'll be more than willing to publish this for everybody and just do a real quick write-up every week. Just saying, it doesn't take very long to do these graphs. When I look at this, the biggest difference is the writing synthetics. Both companies. YieldMax is writing them weekly, where Curve is writing them 7 weeks in advance and then rolling them at the beginning of the month. So it's a big difference between the two on how they're writing the calls. If I look at YieldMax, you can see the calls. So the call spread is the very first green line and the very first red. It's a small call spread. But the other two calls that they sold are slightly higher. Tesla can easily move through all these. And the call spread is a very small portion. If I look at Curve and how they wrote their call all the way out at 315, that's a big difference. They can have a really large run and Curve is way out of the money. And they will roll it in 4 weeks. That's the difference between what they're doing in the two different strategies. I think something this volatile, you might be better off having longer calls farther out of the money and then rolling them. That might be a better option. But everybody's different and everybody has different goals. I'm only showing you what the data shows and what they're doing in the difference. And you can choose at your own pace if you want to get into something that like this or not. It's a very good option for people that want to have that exposure. Or do you put 1% in all the different curves and come up with something very close to a Magnificent Seven, paying much lower yields, very consistent and very safe if you believe in the underlying? Well, that's my review of TSLY and TSLP. I would be considering purchasing right around the $190, even $200. But at $240, this is not a good entry point. Hopefully I've shown you the difference between how they're writing the calls and the strikes. And I really like the 7-week and rolling it out on something this volatile. I'd like to see more call spreads on something like this in the future, if this is something that they're going to be doing. Until next time, God bless.